want to explain what's going on with the first report. It's a little bit unusual. Let me just get my news set up. So there's a report that most people think is taking place at 9:45, but actually it gets released at 9:42. Let me fix my news, and it's a little report called Chicago PMI. Purchasers, managers. Information, I believe, is what that stands for. It's purchasing manager. Index, there we go. PMI, you see PMI on a million reports, flash manufacturing PMI. Purchasing Managers Index is what PMI stands for. So they create an index, and that Chicago index seems to have a little pop sometimes in gold. So every time that we look at it, I think to myself, it's not really that good. But then when we go through the videos, it seems like it's having a move at 9:42. So let's look at the most recent one. Let's see what it looks like. So there's no daily report for this particular trade because this is a trade that I just personally found. And it's not, we have two people that are involved in trading and reports. And my boss makes the reports, and I'm generally in the trade room. So sometimes I'll find an event that we don't have a report for. So there's always extra bonuses in the trade room. You know, we do earnings on all the FANG stocks, and we don't have reports for the earnings trades because it's a very unusual way of trading also, the way we do earnings. So it's like a bonus of being a trade room member. You get a bunch of extra events. That's probably true, I would say, in many places where there's a trade room. But we're a little bit unique in that we generate reports on events. And then sometimes there's events that I've noticed that my boss may have not yet noticed, and I might not have even brought them to his attention yet because we're not sure how we want to handle them, but we might test them in the room. And that's how I would qualify Chicago PMI. It doesn't quite, I'm not sure that it's good enough for a daily report, but it has been behaving not that badly. So let me show you why I say that. Now, let's see if I'm right, if my memory is right. Let's look at last month's Chicago PMI. Now, there's something that's very important to understand about Chicago PMI. It says 9:45. But if you look carefully at the calendar, so everybody knows that we use calendars to help find our trades. Give me a second because we're streaming and the streaming. Okay, I want to welcome everybody on YouTube. I apologize, my streaming started late. So we're here for the Chicago PMI we're talking about. It's a report before CD Consumer Confidence. So what I was going to say is if you look at the calendars, so we use a variety of different calendars to find our events, right? One of the calendars we use is Forex Factory. Now, Forex Factory is probably our favorite calendar. It's very reliable. in terms of schedules, times of events. The reason I don't show Forex Factory during a trade and I show investing.com is because Forex Factory, you always have to press a key or a mouse to get the news result to show up. Whereas investing.com, it just shows up on its own. So it's much more convenient to show investing.com. But if you go through the calendar, like we're lunatics, so we go through the calendar, we try to go through them with a fine-tooth comb. And if you click on the file folder for Chicago PMI, it opens up some extra information. And there's notes, Forex Factory notes. Data is given to subscribers 3 minutes before the public release time. Early market reaction is a result of trades by these subscribers. So in other words, it's a report that the news gets released 3 minutes early to people that trade the news. So what we've seen are possible reactions at 9:42. So we trade this at 9:42, not at 9:45. So last month, what happened at 9:42? So it was October 29th. Now, you know what's interesting about this video is in this video, I'm showing previous 9:42s. So this was June 9:42. And in June, it worked. Okay, it hit both targets in June in a test. Okay, that was not live market. Then in August, and we were in the trade room for this one, but we did not trade it live, and it really didn't respond at all in August. Didn't do anything. And then October, and we don't look at it, we haven't looked at it every single month. October, we were watching it because it's almost always before the CB Consumer Confidence Report, which is a report, an event that we do have a daily market mover report for. So in October, we waited. I'd probably put a 30-second cancel on this event. And in October, it worked at 9:42. And then I've got a September Chicago PMI. And we look at the video. September fills to the short side, hits target 1. Struggles to hit target 2. Now, these are not big targets. We're probably looking at 3 and 7. And it hits it. Yes, 3 and 7 is what we're looking at. So we can scroll back most probably. Now I know what my setup is. And in this video, I happen to show the setup. So Chicago PMI. I've got 2 targets for 3 and 7 ticks. And my bracket on Chicago PMI was a bracket of 6, and we enter at 942. So the question always is, what are you willing to risk? What are you willing to risk? It's a very small report. It probably doesn't make sense. Eric, no, it doesn't always work. I would have thought that that would be true, that the 942 would definitely give you insight into what happens at 945. What's incredibly ridiculous is it doesn't hold water. It doesn't always work. So I don't trade it at 945 because I find at 945 it's more inconsistent. And the word magnitude and Chicago PMI don't go together. It's not a move that has a magnitude. You understand what I'm saying? It doesn't move that big. So here's how I would deal with this. I don't want to risk $200 on a little trade like this. It's a little bit inconsistent, but lately it's been not too bad. It's been seemingly working. It looks like it needs at least a 15 to 20 second cancel, maybe 30 seconds. So sometimes it's actually harder to trade one contract than it is to trade multiples. But in this case, because it's such a small report, I don't want to risk almost $200 if it doesn't work. I just don't. Because it just, over the years, hasn't shown enough consistency. But because every time we look at a video of recent Chicago PMIs, it's not bad. I mean, it seems to at least get the first target and a little bit more. So I would consider trading one contract. That's what I would consider doing. And using a stop of 8. So I'm risking $80 probably to make only about 60. In other words, I'd look for a 6 target profit. And I think you have to risk 8 ticks. You have to risk 8 ticks to take the trade. Is it worth it? You know, I'm going to watch the market. The funny thing is I'm the one that noticed this trade, but I don't love it. I have events that I've noticed that I've brought to the attention of the trader. And I want to be totally honest with everybody. And then when I deal with the event in the room, it's a trade that I'm sorry I had a trade room for it. And I'm sorry I brought it to anyone's attention because I don't really want to trade it. But it's my job to point these things out. If I see something that kind of looks like it's moving, or not even kind of, that it looks like it's moving not too badly, then we're supposed to trade it because that's what we do. But there are reports, and I'm being honest, because I believe in always telling the truth in here. I've got to tell you that it's just not one of my favorites. It's not a trade that I feel really comfortable with because I've seen it be inconsistent. That's the truth. I've seen it behave inconsistently. But lately, it's been trading pretty well at 942. So I'm going to trade one contract. I'm just going to look for 6 ticks. I'm not looking for a big move. I'm looking for, $60. And it's not that I can't afford to trade more. It's just, it's hard to justify the risk on a small report like this. And then if you get a couple in a row that don't work, you haven't lost a lot by trying it live. You only know for sure the truth about a report if you trade it live with real money, because nothing fills exactly the same way as it does when you're live, right? You have to, especially now, fast moves. Live is the only truth. There is no other truth on very, very fast trades. It's just the way it is. On many trades, you can trade test trades in simulation or in replay or playback and have a very good idea what happens. But some trades are super fast. This is not one of those super fast ones. So it's going to give it a one contract try. Just looking for 6 ticks of profit. Risking 8 ticks. So if it fills and reverses, then it will stop me out. I'm going to use a bracket of 6 because it's gold. It's a fairly volatile time of day. Gold's quite volatile to the upside today also. And my entry time is 9:42. If we don't get a move in 20 seconds or so, I might not be able to last 30 seconds on this trade. I'd rather see it fill quickly because that means the market's looking at it and paying attention to it. Now I'm going to check my time sync like we always do. By going to the website time.is, right? And my computer is in sync. So the holiday weekend was all Beatles, all the time, nonstop Beatles. It's all you read about. Get back. Get back, JoJo. I don't know if any of you watched that Beatles special. That was something. That was a work of art, in my opinion. You got to be a fan, but I can't imagine not being a Beatles fan. Why would you not like their music? It was really, really interesting, I thought, to see the inner workings of 4 of the most creative people that ever lived. Whether you like them or not, you can't deny what they created. It's pretty amazing. It was quite interesting. I loved it. I thought it was great. So watching gold, you could see gold's had some volatility on the day. It's very up. The ES is down. I'm watching the ES on the right. And lost in the shuffle. Now, we want to be careful because gold might just want to test that high. So my gut feeling with this particular report is I think that I would rather get filled on the high side, the long side, and see if gold, and maybe gold, if gold tests the high before this report, before 9:42, then I think in some ways it makes the trade tougher. But if gold would hang around where it is right now for the next 5 minutes, and then the Chicago news is a little bit negative, which might sometimes push gold to the upside, we might take part in that test of the high. But if it tests the high before the report, then in some ways, then it's not getting any help from gold's trend. Sometimes you can get help from the trend of an instrument that you're trading. Sometimes you'll get filled before the news in the trend, and the trend will be so powerful that even though it's a small news trade, the result will just pull you in the direction of the trend. And sometimes the trade will work just fine when that happens. But this high of the day, this green line is definitely going to act as a magnet for gold. The only question is what time. It doesn't have to do it now. But it's possible that it will. Sometimes gold will just consolidate before a report. Now, don't forget that gold has rolled over. We're not trading gold December anymore. So like I was saying, I prefer to see gold consolidate here. If it starts moving crazily, then I would consider canceling the event for me, because I don't want to get filled before the news comes out. Now, probably we won't, because our fill time is 9:42, which is the time the subscribers get the news. But the ideal setup is consolidation before a report, not fast trending movement. Now, right now, we do have what I would call 4 minutes of consolidation. This is the 4th minute. Maybe the market's waiting for the event. It's possible. It happens. But these are all the things that go through my mind when I'm trading an event. The most important things you have to remember is there's no embarrassment, no shame in canceling a trade if you don't feel the market is right, if you don't like the way the market's behaving. There's no law that says just because we're in a trade room with people that we have to do things, we have to trade and put our money at risk. We don't have to. I could say, hey, you know what? Gold's moving a little bit too volatile. I'm going to wait out this report and I'll wait for the consumer confidence news. There's no embarrassment in that. You make an analysis, you make a call based on the best experience that you have, and you can't have any shame or embarrassment or feel foolish by doing that. My goal is to try to make money, but part of that goal is to protect the trading account and to educate also. 3 goals. And I try to balance them all. So you could see gold has some volatility. We have a 6-tick bracket. Do I consider that large? I don't. Average, maybe. How do you cancel a trade? Just uncheck the check mark, and that would turn off my trade. Now remember, this is a report that the news comes out early, 9:42. We will see that if there's a reaction to the news. We will not know what the news is, okay? We are not going to know what this news is. Now, I don't see any reaction at all, and I don't like that. So I'm going to cancel, folks. I gave it 15 seconds. I don't see a reaction. I'm out. 20 seconds is fine for me. 30 was 100% canceled, no questions asked, so it's still a cancel. It's 30 seconds after the news. Maybe the news is late today. Maybe it's late, but I don't care, okay? It's okay. It may be late, but regardless, every recording we looked at already would have responded. It already would have responded. So there's no 942 trade. I'll set up a quick 945, but I've told you before, I don't like 945 live money because it's much more inconsistent. So I'm just going to change my entry time to 945, okay? My setup's going to stay the same, but I'm not trading live money because I said before, I don't like the report at 945. I like it at 942, but there was no response. We're coming into holiday trading. We're not there yet. We have a couple of weeks, but we're close. Now, I do believe that there are a couple of things that might goof up our CB consumer confidence trade. Fed people are talking at 10 o'clock. If they start early, that could make things crazy, volatile, crazy. That's what I mean. Not always, but it could. But you could see there was no 942 trade. There was no trade. See that candle? That would have been a trade. Even that candle would have been a trade. There's no trade here. There's consolidation. Who knows? Maybe because it's a private report for 3 minutes, maybe they didn't release it this morning. We don't know 100%. We have to be careful. We cancel to be careful, to protect the account from knowledge we don't have. No pop, no move, 20 seconds. That's enough for me. I'm okay with that. I still think there's just a discretionary test trade of the high of the day for gold. This is 945. Chicago PMI will now come out. And you know what? It worked perfectly. You could see it. See the difference? Today it worked at 945. This is why this report makes me so uncomfortable, because it doesn't hardly ever do that at 945. That's what it does at 942, and it doesn't do it that big. It's just a big mess of inconsistency. That's what this report is. But you can see the lesson here is that is what a news move looks like. And when you're testing and practicing, you want to be able to recognize that. That is a news move. Just learning that is almost half the battle, because once you know that, you know how to test. And you know what the best reports to trade will be, okay? And it's the inconsistency of this particular report that makes it so incredibly difficult to trade. We didn't do anything wrong. We're not stupid. I told you what the challenges are for this report. It's okay. The world's not ending just because we missed it. You know how many trades we miss? You know how many reports we miss? It's unbelievable. You miss as many as you get. So now we have the next report coming up. And look, I've had these trade rooms because I enjoy learning watching the reports. These are not family money trades. These two trades this morning, the Canada GDP was a comfortable trade. I had no problem trading it. Comfortable. It's not a big money maker unless you trade 10 contracts, at least. It's not yet at a 10 contract risk level because of its behavior, but it's been better and better over time. So you're willing to trade it. And it does not make me uncomfortable. I feel like it has a relatively consistent move. CB Consumer Confidence does not fit the bill, okay? It's better lately. I will say this, it's been better lately, okay? It looks like it's been great lately, but it's been hard to trade. I can tell you from all our trading on this report, CB Consumer Confidence has been hard to trade. But as of late, it's looking better and better. That's the truth. It's looking better. I'm going to trade it today because it's got 5 wins out of 6. It's nowhere near a family money trade because you've got some, just over the years, it's been very inconsistent. But as of late, it's trading pretty nicely. So I'm going to trade 2 contracts on it. It's not family money, so I'm trading in our, what I call our test account. It's a bracket of 7. It's a target of 5 and a target of 10. Profit target 1 is 5. Profit target 2 is 10. The stop is 10. I'm already set for a 10 stop. And it's a little bit unusual on the entry time. It's 10 o'clock on the nose. Now we'll watch the ES because there is a possible alternative trade on the ES that did work last month. And I'll label this gold CB consumer. And we also have had a trap trade. Now it's a 20-second cancel. 20-second cancel. Okay. LT, were you talking to me? LT, because I'm not clear on what you're saying to me. If you're talking to me. So Eric, just, as a matter of interest, there was no way to know that 945 would work based on 942 not having a move, right? Now, you notice too that gold, I told you gold was going to test that high. That was really, if you're a discretionary trader, gold loves testing the high. It loves it. It's interesting. We've never looked at the NQ on Chicago PMI as it never moved much previously on NQ. So make sure my setup is there. One more time, going to check my setup. 7 bracket, 1 position for 5 ticks, 1 for 10. My stop is 10. And my entry time is 10 o'clock. And my charts need to be real. And I want to look at my brackets because these charts are spread so wide this morning. So I just set my time to 0. Make sure you set your account to sim so you don't trigger a live trade, and then put your charts on sim so you see your brackets. So now I'm going to see see how my brackets were a little tight. So I'll spread them a little bit. I'll just spread my brackets a little bit. Sometimes when the charts burst like that, there's a tendency to have brackets so tight that you can't see what takes place. So I got to put my charts back, and I put my time back. And my charts get back to live, and now I can enable. We can check our time again, even though we checked it before. Time sync can drift. I'm in. So we have a few minutes. Let's take a quick look at the NQ. Never change a chart that you're trading on. In other words, I would never change my gold chart if I have a trade enabled. It will trigger a trade, possibly. It can trigger a trade. It's always safest to change charts with a trade disabled. I just want to look at the NQ. So at 9:42, see, I don't see that as a news move. That's just an NQ. To me, that's a random NQ trend. That's how I see the NQ. Now, if someone tells me they made money on the NQ month after month after month on a report that I don't look at a specific index, you know I'm going to look at the index. And I want to thank everybody on YouTube. If you'd like to see full trades, go to our website, www.10minutetrades.com, and come and join the trade room. See you next time on YouTube.